Hi folks, it's Björn here, and BYD knows currently only one direction, down, as it went from 278 Hong Kong dollars to 145. So it's almost the half since the all-time high on the 25th of January. Why that happened and what that means, and if BYD is still a buy, I will explain in this video. So I recommend to watch the video until the end to get the full picture here. So on first, we have to understand that BYD shares were in high demand and that the price of 278 Hong Kong dollars were not really justified and were very bullish. And therefore we saw a price correction from February the 16th until the 28th of April, with the share price of 175 Hong Kong dollars at the end. But the main question here is right now why the shares the heck are still dropping. The reason is that on the 28th of April, BYD published his Q1 results. And BYD disappointed the analysts, not me, with his figures for the first quarter. Although the net profit more than doubled compared to the same period of the previous year. Compared to the fourth quarter of 2020, the result was 70% below. In addition, BYD only achieved the lower range of the forecast made. Subsequently, several analysts reduced their price targets. BYD reported a year-over-year sales increase of 108.3% to 40.99 billion yuan for the first quarter. Net income was 237 million yuan, $36.6 million, an increase of 110.7% over the previous year, which is 112.6 million yuan. Nevertheless, analysts were not entirely satisfied with the figures. In terms of profit, the Chinese automobile manufacturer only achieved the lower range of the previously issued bandwidth of between 200 and 300 million yuan. In an initial reaction, analyst Jia Lu from Bank of China International lowered his price target to 140 Hong Kong dollars. And the Bank of America also responded. The experts reduced their target price from 210 to 192 Hong Kong dollars. Only Daiwa holds against it. Analyst Kevin Lau sticks to his buy recommendation for the BYD share. However, the expert reduced the price target from 235 to 204 Hong Kong dollars, which is round about 26.26 US dollars. BYD's numbers were certainly not great. Nevertheless, the course has already anticipated a lot recently. The paper has corrected more than 40% from the high. And folks, don't ask me what the analysts are thinking. At least BYD writes black numbers and not like other EV manufacturers where they say all is good and it's a strong buy, but are in a deep red numbers. But let me know in the comment box below what y'all think. Anyway, right now some news which the most are not aware yet and are not yet reflected at the share price. For example, BYD has announced that it has won a new cooperation partner with Fiat. Not that Fiat is a great car manufacturer, in the contrary, but Fiat is currently building a mini SUV in the Polish plant. Accordingly, the company obtained several offers and ultimately decided, surprisingly, in favor of the Chinese group. Thus, BYD will supply the company with batteries for their e-cars. And an electrical platform has now also been presented at the electrical trade fair in Shanghai, which promises ranges up to 1,000 kilometers. So, BYD continues to be a supplier for technology and is increasingly electrifying its portfolio. The numbers of new registrations also suggest a new positive trend. If you follow my opinion and the opinion of some analysts, the BYD share is a buy due to its favorable valuation. And with the Blade battery, the group also has a unique selling point compared to other manufacturers and is not just selling EV cars. No, BYD produces all kind of utility EVs, like buses, trucks and so on. And if you want, I recommend to check out my in-depth BYD analysis, which I will link up here. So, but what is the correct approach here? As I think the current price is not justified and I still believe in this company, I would recommend, if you don't have any BYD shares yet and you are thinking to buy some, I would build right now a small position and wait how the market reacts the next weeks. So, if it's going more down, you can buy step by step more. If we have a clear upwards trend, however, latest by then I would increase my position. For the ones, for example like me, who have already shares, well, totally hold your positions. Or if you have some extra play money, you can as well buy some more shares. But be aware that the price could continue to drop. But on the long run, I expect that the price will go up again. Well, hope I could help you to clarify the current situation, and if so, kindly give it a thumbs up and maybe even consider subscribing so you don't miss my future videos. That's it for today. Thanks for watching, and as always, stay focused and don't get greedy. See you all next time.